Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Welcome to this review. This is the FibStalker Winning with Algos community. And this video is a daily and intraday review for today, March the 14th, 2018. It is Wednesday and it's 10:30 p.m. EST time in Toronto, and this video is part of the FibStalker Analysis and Trading Service. Thanks for joining, and as usual, if you have not read and accepted the disclaimer, please pause the video now and read the disclaimer here. Past performance is not necessarily indicative of future results. Trading Forex carries a high level of risk and might not be suitable for all investors. So please read and accept before continuing. So let's get into our market. So we'll start from the S&P 500 here. And as you know, we had these 2 days. We had yesterday that ugly bar, and which was followed today, but another down move lower here, and the extension failed. Actually, extension failed on Tuesday here. Okay, the 2765 extension that we mentioned, and the market actually continued lower, and so now what we are looking for is a retest, or sorry, a test of the 50% here, but we are in a range, so it's not said and given that this, if the market gets there, this level could actually hold. Okay, this is a range, and the 50% might not hold. If it does not hold, if 2711 is pierced, then the probability to go back to 2659, it's very high here. All right, so be careful here. At the moment we're seeing a move lower. We could see some sort of bounce or small correction here on the 4-hour time frame. This market has been trading 50% on this time frame, and it could be possible to see a bounce into the next measure move before a continuation lower here. Okay, so keep that in mind. If you are trading this market, 2664, it's a potential 50% short here, and we're seeing a little bit of profit taking from the last 2 days here. So the market could go back into the level and then continue the move lower. Dollar index is still in its at its 50% here, while the other markets are much more bearish. The market that trade along with the US dollar, like the Swiss franc, Japanese yen, and US dollar, Singapore dollar are much more bearish than the dollar, which has held today, as we can see here, has held again the 89.10, which we are mentioning now since a few sessions here. That's the line in the sand for these reversal, if this is a reversal. Okay, and so 89.10, it's still holding, and if this holds, then this market could be projected higher. Okay, so still we don't know whether all this formation here is a consolidation or sorry, and this formation is certainly a consolidation. The consolidation are either continuation moves or are reversal moves. Okay, so we still don't know where this market is going to go. So if we don't know, we need to be cautious. Okay, because then there'll be trends that we can, it's much easier to catch on the larger time frame. On the smaller time frame, there are always trends. Okay, next is the gold and silver. Gold and silver have traded basically laterally here. They're going nowhere. There's no clear decision what the dollar is going to do. If there was, we would probably see it on gold, but gold is still holding that 1304. It has not been retested yet. On the daily, we see a lateral move here with a bearish bias, because this move is below the 1332, and bulls were not capable of holding this price, bears were not capable of holding this price. So this is the definition of a consolidation, and the consolidation is not the space between two trend lines. I traced them only to highlight the presence of a consolidation, and which usually ends up with price ending up into a smaller and smaller range until as every consolidation there is either the breakout or the breakdown, because consolidations are either continuation, formation, or reversal formations. The silver here, it's basically more of the same, going nowhere. I'm not interested in looking at these markets when there is no clear edge here. We can see we can see this price, this range of price becoming smaller and smaller here, and eventually there'll be a change in character here, and the market will either continue higher or continue lower here. Okay, so there's really nothing to say and nothing to do in this market unless you trade in a very small time frame. But even then, because there is no bias, no direction bias here, these are very risky trades. So I'm not going to comment on those. Australian dollar, US dollar is continuing higher here on weakness or continuation, gradual continuation of the dollar here. And you will remember again that this market has not hit the first target here, so it's continuing higher and could retest at 79.46. Let's look at this market on the smaller time frame here, the 4-hour time frame. Hit that first target a few days back, and let's say if 79.13, 79.21. So this is technically has not been hit here, but if it does, sorry, let's say 61 high, it's 15.8. So this is within the 5 pips here, so I'll consider that hit, in which case this market should continue higher or could continue higher at this extension. So far this extension has held. Okay, so there's still a possibility for this market to continue higher into that level of resistance that we know on the day, the 79.46. Say similar story here for the euro dollar, which had kind of a stronger correction here once it has tested the previous highs. However, the let's see if this 50% is still holding in this market, and that would be the the lows to highs here. And as you can see, this market has traded this level here, and also for this market there is the possibility for a continuation higher. Okay, so that's what we see here, and targets are above. In fact, targets are aligned with previous highs here, the first target, and then there's also a second target continuing higher. The daily time frame here has traded the 122.99, 123, and that is a first target 125.13. All right. Next is the pound versus US dollar. And this market is also continuing higher. I traced yesterday the 140.30 level here. I'm talking about this area here, and this area is going to act as our next potential area of resistance if the market gets there. So this market has not been technical as other markets on the smaller time frame. We can see, in fact, that the first 50% measured move here was a busted setup. Nevertheless, it went into that first target, and there was a sequence of inner measure moves here, and we can try to actually identify that sequence. The first measure move is the 138.34, followed up by another measure move here, lows to highs, which were priced into that first and second target. The next measure moves failed, and this market came back to trade here either a smart or a dump money level. When we look at the smart money level, we're going to use this anchor here, and that's what I'm going to use to model the continuation higher into 140.30 area, and eventually that 140.64 that actually brings price into the first target brings price into that level of resistance. Okay, US dollar Canadian dollar has seen a huge move higher yesterday, and then today basically this market went nowhere. It's just a consolidation, which would suggest at this point a continuation higher. Of course, this market is a resistance, so anything can always happen. This market can reverse. However, this market held the extension long. Okay, so long seem to be in control here. Shorts have shorted this market into weekly shorts have shorted this market into a daily level. The daily level has held, showing strength from the bulls from a smaller time frame. Okay, very powerful. So we could see this market continuing higher into the first target now 130.75, second target below previous lows here 132 level, which is what I have also mentioned in my review on the Italian elections. You want to read that analysis at the end of the article, technical analysis again. US dollar Swiss franc, and I wrote that a few weeks back. Okay, before the election, the week before the election, which was March the 4th. US dollar Swiss franc is actually experiencing a weakness here, but that weakness has brought price back into that 50% level, the 94.36. This 50% level is the inner measure move of the larger move that started around 93.40 here, which you see here in yellow. Okay, so an inner measure move has held price once, twice, three times here. The retest here happened three times, and multiple tests. The second test particularly, or you could say this is the second test, it doesn't matter at this point. It has held, and so there is the possibility for this market for a continuation higher into the first target of the current measure move, which lines up with the first target, same area here of the smaller time on the smaller move here. Okay, the inner move. So this level is holding and is offering an opportunity for a continuation higher. US dollar Japanese yen. When we look at this market is giving it up, and we could see that strong move during the open of Thursday and the Asian Open here, and this move was strong enough to break the 50%. It was holding yesterday, and then at the Asian Open here, that has broken. So we'll need to see again. It will all depend on what the dollar index is going to do, whether this is a consolidation for a reversal or a consolidation for a continuation lower. The time frames here are not very technical at this stage, and the smaller time frame at least, which means that this market is driven by dump money at the moment. All right, so New Zealand dollar, US dollar, this market came to test 50% right on the dime here. I'm talking about, and we had this level already traced yesterday. So the importance of following the sequence of measure move when you see one, it's very key, especially in an environment where we still don't know. Well, first of all, the weekly has held here, and we still don't know if the dollar index is going to continue lower or not. Okay, so at the moment I'm seeing a continuation to that first target of the weekly, and also the first target of this new inner measure move here, which would be 73.80, helping price into the target of this larger setup here. Okay, so this larger setup was tested twice, and it's very meaningful. So there is participation for this market going forward, and we could also make the case that the bears are gone now, because this 50% has failed, but the data failed 2 days ago as well, and this is a range, so we know that in a range 50% rarely hold. US dollar, Singapore dollar here, we actually have seen that break of the consolidation pattern here. So this looks like a continuation for this market. Now I use this market as a proxy for the dollar index as well. So if this market continues lower, I'm not anticipating the dollar index to reverse higher. Okay. However, if this is a consolidation, there is still a possibility for this market to react higher, and we will see if that's the case. Okay, here the extension short that we mentioned on the daily as traded, bringing price into let's see, let's trace this again from lows to lows, bringing price into that first target, and the second target is just there. It's previous lows as well. We didn't see this market getting into the level yet, but this market could get there as well. Let me review two more markets here. You have Australian dollar, Canadian dollar, and Canadian dollar, Japanese yen, and then I'll review all the other markets in the second part. Starting from the Canadian, Australian dollar, Canadian here, the weekly has traded, and the inner move here that has traded is the one at 100.23.24, and it has hit the first target already. The larger move here has hit that first target. It has a second target 102.75, which actually it's helped by this measure move. Very little structure in price, price accelerating, so an emotional move here, and it's very likely this price now is going to get into that second target. Okay, so having a larger time frame here sometimes helps. And Canadian dollar, Japanese yen, it's on the other hand, it's basically moving the opposite direction, and it's now retesting again the 50%, which was our target in this move that we actually were able to identify many weeks ago. And this market is trading that level again. We're going to see whether this is going to change, and this market is going to retrace. For this to happen, we need a few things. We need the Japanese yen weakening, and we need the Canadian dollar strengthening. So we'll see whether that is going to happen. Okay, so this is it for this first part, and I'll see you in the second part. Happy trading, and I'll see you in the room. Bye bye now.